Hey, it's Giuseppe with Zenith Home Loans. I hope you're doing great. Today, I want to take a moment and kind of dive deep into the 2-1 buy down, which of course has become a very popular strategy as interest rates have crossed, above 6, above 7, to really try and help the affordability crunch that we're seeing ourselves in. The how high the monthly payments have gotten and help people get into homes. Because at the end of the day, it is an amazing time to buy a home. Right now, we are seeing a lot of first-time buyers, minimum down payments, get into a home, have a seller credit, come for closing costs, and cover closing costs. And with some down payment assistance loans, you could buy a home with literally $1,000 out of pocket because of the market that we're in and the seller's willingness to cover some closing costs. Compare that to just early part of 2022, where every home was literally had to be bid up about 10%. And really, realistically, most people could not buy a home with less than 40, 50, $60,000 out of pocket because they had to cover these large appraisal gaps. And the people that couldn't do that, which is a lot of first-time buyers, did not have that kind of cash laying around that they were willing to part with to be the number one offer, and went back and are continuing to rent. So now with rates moving higher, the market has shifted a bit. We can negotiate and have the seller pay for some closing costs. So let me show you what that looks like. Okay, so if we look at this first column here, it says traditional financing. So if you were buying a $650,000 house with a 5% down payment, as I'm recording this near the end of October, you'd have an interest rate of about 7%. That's kind of where they've been the last few weeks. Your monthly payment would be $47.12. That includes taxes, insurance, mortgage insurance. I've thrown everything in there. You need about $40,000 in order to buy this home. If you are making an offer on a home and you see a home has been maybe sitting on the market for several weeks at $650, you might be very tempted to go in and say, well, I'm going to offer them $635 instead of $650. See if they come down $15,000 in price. And if you do that, and you could do that perhaps, and you could get the home under contract, it doesn't really fix the affordability, the payment situation, because paying $15,000 less for a house while you're borrowing less, it's only going to affect your monthly payment by about $75 per month. Okay, so there's some better strategies. And one that has become very popular because it seems to be the only thing right now that is helping with the affordability is called the 2-1 buy down. There's also a 1-0 buy down and a 3-2-1 buy down, but I'm going to focus on this one for now because it is the most popular and one that requires a seller credit that is doable in this market. Okay, so what this does is it takes a 30-year fixed loan, so you have the same 30-year fixed at 7%, but for the first 12 payments, the first year, you have a 2% reduction in interest rate, so the rate would be 5%. That drops your payment from $47.12 to $39.19, almost $800 per month. Okay, so for 12 months. After the first year, then the rate goes up 1% to 6%. So it's still 1% below the true 30-year fixed of 7%. And now you have a payment of $4,300 and savings of about $406 per month. These are very good options right now. Now, year 3, I'll scroll so you can see it. Years 3 through 30, it just goes back to the 7% 30-year fixed rate. But the understanding right now, where the economy is as we're heading into a recession, as we look back historically, very good chance that we're going to see lower interest rates, perhaps significantly lower, as soon as 6 months from now, 3 months from now, maybe a year, maybe 2 years. But at that point, if you are a client of Zenith, for example, you can always refinance for free. We always do free refinances for past clients. You can work with any lender and they'll just pay the cost to do a refinance. And we'll be able to get you out of this loan into a better interest rate. And so historically, as we look back, every single recession in history has led to lower mortgage rates. So the opportunity, the data is there to make a calculated risk now, buying a home at these higher rates, using the strategies And the benefits, again, are that you're not competing with as many people. You can get the seller to pay these closing costs, and compare that to having to bid up the price from 650 to 700, as would have likely been the case for the past couple of years to be the #1 offer, and having to bring an extra $50,000 to closing. It doesn't even compare. It's a great time to buy right now. So if you have any questions on this, and if temporary buy down like this is right for you, there's also permanent buy downs. You can use that seller credit and just pay points and buy the rate a little bit lower. I'll tell you, if we talk, why I don't think that's a great idea. This is a much better idea. But if you have any questions, anything we can do for you, feel free to reach out, and we'll talk to you soon. One last thing, this buy down strategy, 1-0-2-1 buy down or 3-2-1 buy down, which actually drops the rate 3% that first year. These are available for FHA loans, VA loans, and conventional loans, not jumbo loans, and not any loans with down payment assistance. All right. Thanks so much. Bye-bye.